Hello, I'm Mansoor Mohideen, and this is Bank of Singapore Research. Financial markets are set to remain volatile into the summer. Firstly, inflation continues to be persistently strong. Headline inflation rates have fallen from 4-decade highs hit last year, as central banks have increased interest rates aggressively. But core inflation rates remain high still, above 7% in the UK, around 5% in the US and the Eurozone, and even above 4% in Japan. Strong demand as economies reopen from the pandemic, tight labour markets, and supply chain disruptions are all keeping inflation far above central banks' 2% targets. We thus expect the Federal Reserve, the European Central Bank, and the Bank of England will still increase interest rates further this summer to around 5.5%, 4%, and 5.75% respectively to curb inflation. Secondly, recession risks remain high as persistent inflation and higher interest rates restrict consumption. The Eurozone is already in recession after the region's GDP contracted in the last quarter of 2022 and the first quarter of 2023. The UK economy has stagnated too for the last 4 quarters, and the US is also likely to enter recession this year as unemployment and jobless benefit claims start to rise. Thirdly, China's reopening has flagged. In the first quarter of 2023, economic activity rebounded strongly as consumers returned in force. But in the second quarter of the year, China's growth has lost momentum as confidence in the recovery has faltered. Investors should thus stay cautious on the near-term outlook. In equities, we advocate a modestly underweight stance. Investors should be neutral on the US and China, overweight Japan as its economy finally recovers from 3 decades of lost growth, and underweight Europe's markets. Similarly, in fixed income, we favour US Treasuries and developed market investment grade bonds as safe haven hedges against recession risks. For more information, please refer to our monthly investment guide titled Asia, the Game Changer.